Welcome back. Starting this week, Walmart Plus members will get a 24% discount on all digital orders at Burger King. It's just the latest example of how retailers are shifting strategies to attract customers who are increasingly looking for value. But my next guest says there's one name that's already been able to capture those selective spending dollars, TJX. The stock on pace for its best week in more than 2 years after yesterday's earnings beat. And Lorraine Hutchinson is confident there's more upside ahead. She's BofA's Securities senior retail analyst. A buy on the stock, a price target of $135 now from $115. Lorraine, it's like Costco. Why even talk about TJX? They just keep winning. I don't even know what there is to say.
It was a remarkable quarter, and I think what stands out about TJ is its consistency. To put up a 5% comp at their largest concept, Marmax, is really going to be a standout in this environment where the consumer is showing some signs of challenges. I think one of the most exciting parts of the story is TJ's focus on a younger consumer and market share gains there. This week, our BofA Institute put out a report called Trading Down is the New Dressing Up, where we use our proprietary BAC card data to show that the millennial and Gen Z generations are spending a lot more of their money in the value channel than the cohorts before them. I think this bodes really well for the off-price sector over the coming decade and really gives them an opportunity to gain mind share and a very long lifetime value with this consumer cohort.
You cover a lot of these names. Are there any that are, as you say, you see at least 10% upside for TJX? I mean, probably more. They've successfully navigated to now the Gen Z crowd, as it appears they're going to have no problem kind of moving from one generation of shoppers to the next. Are there any names that could have more upside that maybe are less appreciated but executing just as well?
If you look at Burlington Stores, it's another off-pricer. It's smaller than TJ, and they've had a slower recovery from the pandemic from a margin perspective because they had a lot of investments they needed to make coming out of COVID. They've now made these investments, and as we've seen sales reaccelerate, we see a lot more margin upside there. So we're looking for Burlington to grow its earnings over the next several years in the mid to high teens, which is industry leading and should result in a very strong stock price from here. So that's one I would really pay attention to. It's not as steady or consistent as TJ, but we do see a lot of margin recovery potential from 6 to 9%.
All right, final question. The news this week is worth dwelling on. I mean, Walmart launching a Burger King for Walmart Plus for a value option. Chick-fil-A is launching a streaming service. So what in the world is going on? Are these lifestyle brands more so than just retailers? And how is the internet plus apps unleashing what the next wave of retail might have to look like in order to stay competitive and keep an audience?
I think it's this younger generation, they live online. And so any brand tie-ups, any collaborations you can do have been very well received. It's a good way to generate brand buzz and brand traffic. What we've seen with, TJ, for example, the off-pricers, they don't have a huge e-commerce business, but they have been really big on social media for things like back to school and back to college. And that's been a really important way for them to reach out to shoppers.
Yeah, that's clever that they kind of hopscotched over the internet and e-commerce and just said, yeah, we'll just use social media to keep people coming into the stores. Didn't see that one coming, but it's worked out quite well for them. Lorraine, thanks for joining us today. Appreciate your time.